Hello, I'm Cameron Jones. I'm the founder and CEO of Check Bookkeeping, a virtual bookkeeping firm specializing in QuickBooks Online and with real estate investors. So I also work with other service-based small businesses as well, not just real estate investors, but I specialize in real estate investors. So real estate investors is a pretty broad term. It can include wholesalers, fix and flippers, private money lenders, short-term, long-term rentals, and people that do the Burr method, which is like a mixture of, pretty much everything. So each type of investor would need to have a specific way that they should be tracking all of their finances. First and foremost, I always recommend all business owners to use QuickBooks Online. QuickBooks Online is going to be your step up from using manual Excel sheets and Google Sheets. All of that stuff is just not going to be able to get you everything that you need for your accounting software. At the end of the day, you're going to need to keep track of all of your expenses and income, and you're going to need to make sure that you're able to get all of your profit and losses and balance sheets. All that stuff is using double entry accounting. So I know it's a lot of jargon, but double entry accounting is basically the checks and balances within your accounting system. So this is why you pay for these subscriptions and these softwares, because QuickBooks Online is going to do all of that back end work for you. So at the end of the day, you want to make sure you're picking the right subscription that works for you. It is going to be an expense, but you got to consider it as a business expense and understand that you're going to get a return on investment, because you're going to keep things organized, you're going to be consistent, you're going to have reports that actually make sense and mean something to you. Because at the end of the day, reporting is not all about just taxes. Yes, you got to file your tax at the end of the year, so that means you have to make sure you get your profit and loss. And if you have a corporation, you want to make sure your balance sheet is on point, and all that stuff will be sent to your tax preparer at the end of the year to file taxes. But honestly, an excellent business owner, one that will have excellent cash flow, will be keeping track of these items throughout the year. So you want to be checking your profit and loss and balance sheet at the end of each month to see how much money you've made. Is there any type of expenses that you may want to reconsider and remove? Or is there a real return on investment on all that advertising that you're putting into the business? Are you seeing any changes, any trends? All of that stuff will be tracked on QuickBooks by making sure you have a great foundation in place and checking your reports frequently. And even before that, you want to make sure your bank feed and all your categorizations, bank reconciliations, all of the back end work stuff is done consistently. So what I'm going to do today is explain to you what type of subscription you want to get as a starting point based on your business model. So the lowest end that each customer can choose would be the Simple Start. So Simple Start starts at $35. Well, at the time of this recording, it starts at $35. And generally, QuickBooks will always give you some type of promotion in the beginning for brand new customers. So they usually give you like 50% off for the first 3 months. Honestly, that sounds like a great thing, but if you're going to work with a QuickBooks Online Pro advisor like myself, I'd be able to get you preferred pricing. So I'd be able to get you a preferred pricing for 30% off for a full year if you're a brand new customer and you get onboarded with my services. So keep that in mind. But for a regular customer that's going to do the bookkeeping themselves, you're going to be looking at these prices here. So it'll be $35, and then they'll cut it in half, 50% off for the first 3 months. So Simple Start is going to be the most basic type of package. It's still a pretty robust system, but it's still going to give you only the basic type of package. It doesn't include class tracking. So that's something that fix and flippers, short-term rentals, people that have more than one property, concurrent properties at once that they want to track at the same time, Simple Start would not be the option for them. Simple Start would be great for a wholesaler. So a wholesaler won't need to keep track of many, many properties, because technically they won't be having any properties. They'll just be holding the contracts. So Simple Start would be a better option for them, since there's going to be a lot more frequent turnover. And the main thing that you really want to track would be advertising and seeing what type of avenues are working for your business. in advertising, so you can have it in different buckets. So you might want to keep track of overview of advertising, and then if you have a marketing manager, if you have printed ads, if you have social media ads, all you'd be able to have different categories and be able to compare and contrast and see what you're doing within by each month, seeing if that's actually translating to revenue. And it'll keep that in a concise way on Simple Start. So Simple Start, it'll really just be the accounting and the bookkeeping, get you all of the reports that you need, but it won't be able to allow you to do any bill pay. So that's the accounts payable. So that's one thing. So accounts payable, that's going to be where you're going to be sending out, you're going to be paying invoices from vendors that you're working with. So that may not be a big thing for wholesalers. So that's why if I see any wholesale clients, I always try to steer them towards the Simple Start after a conversation. Next step would be essentials. So that's also a pretty good solution as well. It does include accounts payable, so you are able to pay bills and keep track of that, and also keep track of 1099s as well. But one thing that Essentials lacks is class tracking. So whenever I see any fix and flippers, whenever I see any short-term, long-term rentals, anytime people are using the BRRRR method, anytime I see people that have vacant land and they're doing build outs, these are type of business owners that are going to have multiple properties and multiple concurrent projects. So they want to keep track of more concise reporting. They want to keep track of more detailed reporting. So this is the plan that I always steer them towards, which is the plus plan, because that is the minimum plan to allow for class tracking. So you want to equate class tracking basically with property tracking. So if you have a property at 123 Main Street, that's going to be considered a class. You have a property at 456 Maple Avenue, that's going to be a class. And say you're fixing up two of those properties at the same time. So you would need to make sure that you're categorizing and you're realizing all of the expenses and the income for each individual property. And on your bookkeeping system, you need to make sure that you're allocating and moving each item that's in your bank feed to those specific properties. Because ultimately, at the end of the day, it's going to be important for taxes because you're Schedule E. You're going to need to make sure that all those items are categorized per each property. And you're going to need to see, to make business decisions, to know how much each property is costing you. Where are you spending HVAC? Where are you spending in your demolition costs? Where are you actually putting, the money into? Which properties are taking up a lot of different items? So that helps with your reporting. It helps with being able to keep track of everything. And down the line, when you're trying to budget for future projects, you're able to see exactly how much did this particular property in New York take? How much money did it take? Where did I have to spend it on? And then if you have another property that may be in New Jersey, you can do the same thing. You want to keep things differentiated. That way you're able to look at the reports and have it in more of a concise manner. So I always gear towards plus at a minimum. Advance is a very robust system. It does allow you for unlimited classes. I don't think most people will really need the advanced subscription. So with plus, you have 40 concurrent classes, so that you can track 40 concurrent properties. With advanced, it's unlimited. So it's pretty rare to be over the 40. So at plus really will be the most bang for your buck. And it's going to keep track of everything that you need to keep track of. My recommendation, if you have any other multiple entities as well that you need to track, I will always steer them towards either having a separate Simple Start, or if they get onboarded with me, I can also get them a ledger account. A ledger can be a lot more cost effective. So that way you're able to keep track of multiple entities, concise, and in a reasonable expense, and making sure everything is where it needs to be. So yeah, that's basically it in a nutshell. So if you're fixing and flipping, if you have short-term rent, long-term rentals, multiple of them at once, vacant land builders, go for the plus. If you're a wholesaler, a broker, an agent, realtor, go for the simple start. And again, you can always change to different subscriptions as your model changes. So you're never going to be locked into one particular model. Do want to mention that if you go to advanced, you are going to have to call QuickBooks and ask them to get a reduction. It's not a click of a button, but if you're on any other subscription, you are able to downgrade and upgrade. Okay, so again, I am able to offer you a QuickBooks Online Pro Advisor discount. So that would be for the first 12 months, you'll enjoy a 30% reduction in the sticker price. So if you are stumped with bookkeeping, you don't know where to start, I will be happy to help you. So I can be reached at 646-825-3363. And I can also be reached at Cameron at checkbookkeeping.com. Thank you.